What's happening, traders? Welcome back to another video. Hope you're all good. This is going to be a psychology video, basically just a quick update on the psychology that I use to keep myself on track while I'm in the markets. And hopefully from this video, you'll be able to take away a couple of tricks and tips that you can use yourself while you're trading. So let's go. Okay guys, so psychology and trading. This video is an unscripted video. I just want to come on here and talk to you about the psychology of trading, how I use it for my trading, and how I can stay calm in the markets while I'm, risking my capital, and how I use certain tricks and tips to keep me level-headed or from keeping me out of the market instead of always in there. So hopefully from this video you're going to take away a few things that can really help you in your trading career and keep you from making some silly mistakes. So let's get into the first one. Okay, the first one is emotional trading. Okay, now trading is emotion. Okay, it's a psychological thing. The markets are literally run on psychology, depending on people's feelings on a certain asset or a certain currency. So trading is a psychological thing, and you've got to really try and train yourself to become almost robotic in a sense, where you want to have enough things in place where you're not going to get over emotional because you're losing too much because you're over leveraged, or you get overconfident because you're winning too much, because that has been something that I've had in the past, where after getting pretty good at trading you can get overconfident, complacent, and it actually has a downfall because you've had, say, a really great week. You come into the next week feeling like an absolute boss, like you've clicked it, you've got it, that's it, right? You come in a little bit complacent, you think you're going to win every trade or win loads of trades, and then it starts going wrong, and that first loss can really give you a big hit because you're already up here. Then you're going to get knocked down a level, then maybe you lose again, and then after that you're trying to win back, and it can go into a spiral. So you've really got to try and keep your emotions on a sort of a neutral path. They're obviously going to want to go up and down. That is, we are human after all, and we are an emotional being. But in this sense, you want to try and stay as linear and as neutral as possible, because the emotions can blind you from good setups. They can get you in the markets in the wrong time, and it's very important to try and eradicate that and just follow a system. Follow your rules, execute, win or lose, doesn't matter the result. Move on to the next one like nothing happened. So the next section is going to be about risk management and how you can keep your brain safe from being panicking while you're trading with some risk management. Let's go. So over leveraging is a big problem in the trading world, especially with retail traders. Obviously, the get rich quick mindset is definitely there for trading. Okay, it seems like it can be a get rich quick scheme or way of doing it, especially with people on Instagram and whatever else, but it's not. It's a marathon, and you've got to take things slow. It's not about a day of trading, it's about 2 to 3 to 4 years of trading. That's really going to make the difference, right? So if you're starting with a small account, let's say, and you want to make 50 to 100 pounds a day, you put in 100 pounds into an account, it can be very difficult to do that, right? You're going to have to over leverage to do that. If you're going by the proper risk management of risking 0.5%, 1%, 2% on your account, you're risking like 50p, £1, £2, $2, whatever. If you're going to make if you've got a 1 to 3 risk to reward, you're going to make $6 on that trade. Now, obviously, putting $6 out of the markets from a successful trade is great. But if you're trying to, really build some finance and make a living from it, then it can get frustrating, and then you're going to over leverage. You can also over leverage on challenges, because the money there, although you've paid for that challenge, is not necessarily you're not completely risking that money. It's not yours. So you can over leverage there because you want to pass the challenge or pass phase 1 or whatever, and that can really give you a downfall, because if you over leverage and you go in the wrong way, then you're going to get very stressed, right? You don't want to be stressed when you're in a trade, like, at all. You want to be completely relaxed. You click that button, win or lose, it's not going to affect you that much because you have a plan in place, and you know that your trading strategy is profitable. You know your hit rate. You know that overall, over the long run, you're going to be profitable if you stick to your rules. And also if you're not over leveraging. You know, if you're only going to lose 1% on your account, that's not a big deal, right? Because if you win the next one, you've got a 1 to 3 risk to reward ratio. You've just gained 3% on that. And with a 1 to 3 risk to reward ratio, you only need a 30% win rate. So, you know, over the long run there, you're going to be profitable. So the idea is to not over leverage, really bring down your lot sizes, manage your risk, calculate your risk and how much you want to you know, put into the market, because if you don't, the market will take it away from you, and it will also take your account. And it's done that to me before, and it would hopefully won't do it again. Had enough time to practice not that happening, but you never know. You know, you got to try and keep that emotion as equal as you can, as level as you can, and that is done by not over risking your account. Obviously you can have a high reward, but the risk is going to outweigh those rewards most of the time, because your emotions will come into play and you'll make bad decisions. Okay, the next thing is limiting the amount of strategies and pairs you look at. Okay, strategies, you need 1 to 2 strategies. That's it. Okay, ideally just one strategy, and I'm pretty well down to just 2. I did have 3. The third one I don't really look at that much because I don't need it. Okay, my one strategy, my main strategy, and if you're a member of the channel for a while, you'll know what it is. It's the fake out breakout strategy. And although that strategy as a whole has been going on for a long time, I've created my own rules for it, and I'm very happy with it. So limiting your strategies is important. You don't want to have too many going on, because in the past I've had, you know, 5 strategies. I think I know what I'm doing. One of them says go up, one of them says go down, and there's a lot of information that can just contradict themselves, and then you get very confused, and it can be very bad for the mental state while you're trading. So limit your strategies, 1 to 2 strategies, and that's it. Master them, spend all your time on them, back test them, get confident with it, and that's really going to help keep you level-headed and not have too much information to get confused by. Also, too much information can be too many pairs to look at. Now, I do look at quite a lot of pairs, but in the recent months, I have pretty well put it down to 4 pairs, okay, that I really look at. And that's good. 4 to 5 pairs, I think, is a good amount to look at. That way you don't have too much information to look at, and also over time you're going to learn those pairs and how they move. I've been guilty in the past of, you know, I have a list of all the Forex pairs, because if someone ever says something in chat or in live, I can then quickly go over there, see what they're saying, give them a bit of a analysis if they want it. But it's quite easy just to get lost in that huge list of pairs and just flick through until you find something that looks like your setup. Just keep flicking through, and I've done it in the past, and then you start to want to trade more, and then you just want to get into a trade more. You may find something that isn't a very good setup, you take it, you lose, your psychology goes down because you haven't had a good trade. So limit the amount of strategies and pairs you have so you can really dial in that. And if there's no strategy or no setup appearing, then there's nothing there. And that leads me on to the next thing, which is a tip and something that I created for myself, which has really helped me. So let's get into that. The jump. Okay, I've called it the jump because I noticed that a lot of my winning trades are from when my setup literally jumps out at me on the screen. Okay, I might come to the charts in the morning. My strategy is in the London session, specifically from London session open, maybe through till New York. So it's a whole London session basically, but first thing in the morning is when most of the volume is, and it's when the setup works the best. And sometimes I come onto the chart, I'll literally click onto one of my pairs and bang, there it is. Like, it's there, it's jumping out at me. I take the trade, don't think about it, all my rules line up, go for it. Other times, if you're here just hunting and you're just staring at the charts, you're going to be looking for something that isn't there, right? And if it's not there, then there's no trade to be had. So wait for the trade or the setup to jump out at you. As soon as it literally is clear as day there, attack it. If it meets your rules, take the trade, okay? Don't take a trade if it's not showing itself to you and literally jumping out the screen. That's why I call it the jump, because if it's right there, then it's right there. If it's not there, then there's no trade to be taken, right? So yeah, try and wait for that setup to come and be patient, which leads us on to the next thing, which is patience. And as I said with the jump, you have to be patient to wait for that jump to happen, right? If you're not a patient trader, then you're not going to be a successful trader. I'm a skateboarder, as you can see here, And skateboarding, if you want to get good at skateboarding, you have to impatiently just keep trying a trick until you get it, right? You have to be patient with the tries, but you have to just keep impatiently try and try and try and try and try. Now, with a skateboard, at a skate park, that's fine. You know, you're going to fall over, get some cuts and bruises, maybe be like, right, I'm done for the day, come back the next day or whenever and try again. But with trading, if you keep going and going and going and going with trade after trade after trade, it's not going to be you that can't walk home, it's just you're going to have an empty bank account, which is pretty much worse than that, right? So you want to be patient, wait for that jump, and just sit back, put some music on, have the charts here, you know, have a look. If there's nothing there, go away. Set some alerts if you know where you're going. If you've got you know, set parameters like I do with my strategy, I have a high and a low, I'll set an alert at both, and then if I get a bing, then I need to come back to the computer. Other than that, there's no point in being here just staring, because you're just going to be impatient. You're going to get frustrated because you're not getting a trade while you're sat here trading. Okay, trading isn't always just about being at the computer the whole time staring at the charts. Okay, it is about staring at charts to learn, but if you're actually looking for a trade and once you get comfortable, you know, for me, trading is setting me free, right? I come to the charts, I can take my setup, enter the trade, leave it, manage it whether on my phone or whatever, done for the day. I'm gonna go ride my skateboard. That's basically it. All right, so patience is massive, and if you go check out the link in the description, we have our trading themed clothing brand, and you can get a Patience is the Game t-shirt there, also a Patience is the Game mouse pad, because at the end of the day, patience is the game, and this is the game of patience. 80% waiting, 20% action. Okay, and that is about it. Just basically a quick run through. Keep your emotions as level as you can. Okay, if you're having a really bad day, step away from the charts. Okay, if you're having a good day and you've won, step away from the charts. All right, if you keep going, you might lose that winners. You just got to keep yourself level-headed as much as you can. Keep your risk management. Create a risk management plan. Okay, you need that. Don't over risk. Make sure that when you're in a trade, you are not bothered about that trade losing at all, because that way you know that you're not over risking, and if you are going to win, then you know it's going to be good. Okay, so just try and keep your risk management plan solid and try and protect your capital at all times. The other thing, limit your strategies. Find 2 strategies that work best for you and just work on them relentlessly until you master them. Okay, too many strategies is going to be too much noise. The same with too many pairs. Find the pairs that work best for your strategies, stick with it, you're going to smash it. Okay, the next thing, the jump. Wait for those setups to jump out at you. If they're not jumping out at you, there's nothing there, then you're not trading. And finally, patience. Patience for the jump, patience for your setup, and just patience for your trading career, because patience is important. And that's about it. Okay, stay happy, stay focused, enjoy trading, enjoy the process, because it is a process, but you will get there in the end. And trust me when I say this, it will come. Alright guys, thank you very much for watching. I hope you enjoyed that. I hope you found that useful. Check out the links in the description, and I'll see you guys in the next video. Peace.